Really excited about this panel. We have Ross Fubini, who is a longtime technologist, VC, investor in LendUp, and board member of Beneficial State Bank. Today he will be doing a fireside chat with Jacob Rosenberg, who is the co-founder and CTO of LendUp. At this time, I'd like to hand it over to you, gentlemen.
Thanks.
Oh. Thanks, guys. Very high chairs to get to our water. Thanks again, and thanks, Jake, for being here with us today.
Thanks for having us.
So again, my name is Ross Fubini. I'm a venture capitalist that focuses on financial infrastructure and fintech companies. I'm lucky to be an early investor in LendUp, where Jake was a co-founder. So Jake, maybe start off by telling us a little bit about yourself.
Sure, yeah. So thanks for having me today. Really excited to be here. My name is Jacob Rosenberg, and I'm the CTO and co-founder of LendUp. LendUp is an online lender that makes loans and offers credit cards to folks who can't get loans from banks and credit unions. So we offer credit to the 56% of the U.S. that has a credit score of 680 or below, what would be called subprime, with the goal of helping them build their financial health over time. So we started out with a small dollar payday loan alternative product, and then launched an installment loan product where we could help people build their way up to larger dollar amounts, lower interest rates, and help build their FICO scores. And recently we've also launched a credit card in partnership with Beneficial State Bank, where Ross is a board member. My background is in technology. LendUp is my first foray into financial services. I was previously at Yahoo, where I was the 80th employee in 1996. Was there for about 13 years, building a lot of different web products, web applications, mail, travel, auction, search, you name it, I worked on it. And then went to Zynga and built a central platform infrastructure, and then started LendUp, where I got a chance to work with Ross.
And Jake, it's a great introduction. We've had this wonderful double intersection. We were first investors in the early days of LendUp, really for two reasons. One, around the social impact we thought we could drive for the rest of the world that wasn't being served by traditional banking. And then second, really the opportunity for LendUp to be a destination. So many fintech sites and fintech services are really transactional. But instead, LendUp really had a point of view of being a place that people were going to come, spend time, and benefit from their time at LendUp. Could you just talk a little bit about that idea and how that's come to now fruition and what you've built more recently?
Sure. So the mission of the company is to provide anyone a path to better financial health. And the anyone there is intentional. We say our product is, it's not for everyone, it's for anyone. And what we mean by that is the goal is to build paths to financial health for people who don't necessarily have those already. So we started with the small dollar alternative product with the intention of making something that was a little easier, cheaper, more transparent. But we knew that we could flip the model around in such a way that we would offer better products over time, and we would create a lifetime relationship with the customer. And rather than create a model where we were trying to hit them with fees and have them rack up debt and then pull that back, we would create a model where they succeed when we succeed. We align our incentives together, and then the entire company is focused on how can we incentivize the right behaviors for customers, introduce credit education, make sure they're using the products in a way that's constructive to their financial health and helping them build over time. And so that has been really successful. We built as I said, the small dollar product, the installment loans, and now we're foraying into the credit card, which we're scaling, which is really exciting to do in partnership with Beneficial State.
And that's a perfect lead-in to the work that we're doing now. The second great intersection I've gotten to enjoy LendUp is through being on the board of Beneficial State Bank. Beneficial State Bank is a pretty special bank. It's about a $2 billion asset under management community bank, but it's one that's been set up as a B Corp, and so has a particular mission alignment, similar to LendUp, about really serving the community and serving it well. That's not being served by current banks. So there's been a real strong effort there, and so we're the card partner for LendUp, and I think an important component of that is really thinking about how a bank was able to work with an innovative company like LendUp. So starting from really a technology perspective, and Jake and I share that point of view. We're both ultimately technologists, but are really interested in building these companies that scale and being part of them. Jake talked about what tech have you had to build at LendUp? Historically, financial services, what we see in the bank, and more broadly, they're built from a bunch of blocks you buy off the shelves. Is that how you built LendUp?
Yeah, so our goal really was, my co-founder, Sasha, who's also happens to be my stepbrother, his background really was in financial services, and he had been at Citi for a long time, and he had struggled to build and deploy the kind of products that he wanted and create the kind of innovation that he wanted to see. And so he would come to me, he was living on the East Coast, I was on the West Coast. He would come back for Thanksgiving and he would say, man, I really can't do the analytics that I need. I really can't build the products I want. Can't help customers the way that I'd like to. And I would constantly say, hey, this sounds like a software problem. This sounds like a software problem. If you need data, it's a software problem. If you need to build a product and move monies around on the back end, that's a software problem. And eventually it sort of kicked in. He said, what's this software stuff you keep talking about? Maybe we can put our heads together and do that. So we really had to take the approach, since I was a co-founder and we had that DNA of a technology company and that buy-in from him from the ground up, that we were going to build our own platforms, and we were going to, anything that we felt was a core innovation potential, we were going to build it. And so we have a pretty significant in-house technology team, and we really consider ourselves a technology company that builds financial services, and that runs through the entire DNA of the company in the sense that we take a very iterative development approach. And that's posed some interesting challenges as we've gotten to work with the banks, because if you hit the next slide, that banking infrastructure is challenging to integrate with, its old systems. I was just reading that I think somewhere between 80 and 95% of all financial transactions go through some COBOL mainframe. So you're integrating in batch processes, you're dealing with very old systems. And so we really took the approach that we were going to build the thing, from the bottom up. So we built our own core payments processing infrastructure. We built a general ledger internally. We built our own decision management, decision processing infrastructure. We built our own PCI Vault, which we partnered with, I think, one of your portfolio companies, VGS, Very Good Services, to build. We built anything you could think of. We wanted to be able to own it and have those systems interact and operate together, which is great, but it's the challenge of how do you get that to work with the core banking systems. Now, you guys are building a bunch of core stuff at BSB as well.
Yeah, and there are two parts. That the first that's been interesting is, as a technologist, you're sitting in a bank board meeting, and you're excited about the flexibility and the speed and the agility that you can change a model and iterate a design. It's really shocking how much your chief risk officer is not interested in exactly that, those changes. For me, one of the things that was most fascinating, the reason I joined the board of Beneficial and a bank board is actually wanted to understand both why banks are powerful and their limits. And the reason why they're powerful is, everything in this room, every bit of clothing you're wearing, every seat you're sitting on was built by a bank. Like, banks are probably the most powerful force in the economy. There's this HBO show, Deadwood. It's about the craziness of the Wild West, and it ends. The season ends. The show ends when they get a bank, because that is what is civilization, is banks coming, and it's so powerful to see. When you can lend it 40 bips. It's a really powerful thing, and all these powerful people have got aligned around your board meeting to make sure you don't screw it up. And you know what they don't want? They don't want that agility for the most part.
Agility means risk, right?
That's right. That's right. And Jake and I have talked in past about how we're sitting there and you get a very different point of view when you're thinking from the bank about, well, I just don't want to do anything that's going to put my camel score at risk. I don't want a regulator to come in and move my my compliance scoring down one peg because I can't explain to them what we're doing. So can you talk about how? So we really had to learn, and I think a lot of what got us there was a really strong sense of mission alignment and what we thought would be possible together. Could you talk about how you, from the LendUp perspective, the beneficial state business relationship works?
Yeah, sure. So the first thing we did when we knew we were going to have to work with the bank, work with the bank eventually because they are so central.
Actually, could you explain why do you have to work with the bank?
At some point, if you're going to move money around, it's going to go through a bank if you want the liquidity, the transaction, and there are certain things only banks can do, right? They're chartered to do certain things. We want to issue a credit card, we have to partner with a bank,
and I think that's a really important insight that a lot of
we wanted you to issue the credit card, we want to operate for you, then we have to partner with the bank.
That's actually one thing that I think a lot of financial fintech folks don't always realize is that only banks can do that. You have to have a bank charter to do that. So you need that bank relationship.
Yes. So It was always part of the vision to expand into products that we knew that we would partner with to provide to customers. And so, but what we did is we started with a product where we could own our destiny a little bit, right? We started with the small dollar loans and the installment loans, which are state by state licensed. And then we could build that core infrastructure and build that platform and wait for that automation curve. I mean, for those of you who have built technology in-house before, there's an investment that you have to make, and it starts to pay off after time where the automation curve flattens out. The investment you make pays off, and you start seeing the system work correctly, and you sort of approach correctness. We wanted to do that first before we went up against, the kind of oversight and compliance that you guys have and the kind of risk that you need to manage. Demonstrate a track record of being able to report, being able to demonstrate compliance, being able to move monies around appropriately, being able to account for everything appropriately. Everything that we needed, being able to manage our risk and demonstrate risk performance over time, all the things that you guys needed to feel comfortable. And then after a couple of years of being able to operate that product, we'd established that track record, had the technology in a more stable place, and could approach you guys about, hey, let's partner, take a look at what we've built here, and let's dive in and try to build something together.
Yeah, it's great. On the bank side, again, I think to your point, it really started with this really strong mission alignment.
Absolutely.
I think the first board meeting that was at where we talked about LendUp, we were actually talking about some of the risks. We were running a pilot program, and we were talking about whether it was going to change our capital allocation reserves. It's a pretty fundamental question for banks, and and we were talking about the difficulties of doing that and the risks we were taking on. And then the next discussion was about our mission to go positively impact this underserved banking community. And then the story was how LendUp was doing that, and that mission alignment enabled us to go forward and build the partnership together and go through all those bumps. I'm curious, where else have you seen, or how else do you think LendUp can work with banks? What are the other things that you see in addition to the mission that we can go accomplish together?
Yeah, I mean, I think the mission is the thing that allowed us to ultimately make the partnership work. There's no question about it. There were challenges, there's expectations. Any partnership, there's always an establishment period. And if you've got, if you're being overwhelmed by risk, which you have to manage your risk at a bank, it's gonna break down a partnership unless you guys really agree on what you're trying to achieve together. And I think there was such unbelievable alignment around the social impact we wanted to make between BSB and LendUp that powered through all of those complexities. So you were asking about.
I was asking about different ways that then you think. Well, I'll tell you, like ways again from a bank perspective and a broader venture perspective. We think about fintech companies really and banks working together. One of the things, it would have been impossible for us with existing card relationships to go service this group. Frankly, just the technology isn't there for people to accurately do the risk scoring and develop those cards. That was something we really turned to LendUp to provide. So to building these whole new lines of business for us.
Yeah, I think that's the other piece. We have to provide some value. We have to allow you to enter some new market that you couldn't normally do because it's operationally complex, and we have technology that automates, the operational complexity, or open up, a new revenue stream. Obviously, you guys are triple bottom line, which is, I love that it's triple bottom line. It's like, you want to explain the third bottom line by the environmental impact?
Oh well, it's a point of view for which the bank has a very holistic view that as the bank operates in the world, that we should be making the planet better, the community better. So it sort of transcends every part of what we're doing as a business. And so we think about that a lot. Actually, as we develop other lines of business in lending for housing, for commercial lending. So how is the loans that we're enabling positively impacting the world? And it's interesting because that discussion in our bank is around our mission. There's a whole nother discussion. A friend of mine is on the board of Barclays, and they have a similar, but different set of missions that are also about how innovation can help them achieve their goals. I think that's been a real strong view of figuring out what are the goals of the bank you're working with, and how can you help them get there faster? Because there are a lot of things that it's really difficult for the banks because of all these regulatory issues to get to the goal of delivering a better solution to underserved people, to get to more flexible set of products in the case that Barclays is rolling out that can only be done through fintech partnerships. So you and I have that view. We get to see new companies getting developed. We've got this one. We've got other infrastructure plays. Broadly, through the LendUp lens and the broader ecosystem, where do you see big opportunities right now as banks and fintech companies are working together?
Yeah, absolutely. So, and one last thing I forgot to mention, by the way, having a true technologist on the board of the bank, understanding how the risk curves are gonna flatten out, how that is going to give us ability to enter new markets. That is a huge part of it as well. So you're sort of our Trojan technologist from inside the bank, helping translate and explain, which we didn't talk about, but that was hugely, I think, important to making things work.
And it's interesting. There's a lot of deep understanding about how risk management and those curves move within banks. The little connection I can sometimes play within my bank and in other environments is explaining to people how those curves are going to move because of, say, an innovation in modeling, or how we're developing different risk, managing different, even marketing channels effectively, and how we can all be comfortable with that. That's sort of the technology meeting the expert bankers that I'm lucky to work with.
Which coincidentally is one of the areas I'm most excited about for the future, which is, LendUp's been able to push a little bit deeper into the risk segments because we have a modern, completely built from the ground up internally risk management and decisioning infrastructure with machine learning built in, and we've been able to demonstrate the stability and performance of those models. And I think as machine learning gets more accepted within the domain of risk management for financial services, and as that begins to be more understood within the regulatory community, as that conversation continues, obviously some interesting, social policy aspects of that in terms of disparate treatment and impact. But I think as that begins to take hold, and I think it inevitably will, the ability to service more customers more effectively, the ability to figure out which customers are getting products that are not as good as they should be getting because they are undervalued from a risk perspective, is something I'm particularly excited about, and that I think will give us a lot of leverage to be able to offer better products to people over time.
Yeah.
That's one area I'm really excited about.
Yeah, and I think exactly in corollary to that, the opportunity that I've seen, and some we heard from today, is really in this financial and banking infrastructure, which is enabling the banks and enabling the LendUps of the world to move faster. We were talking before that basically we live in a world of Fiserv and Jack Henry, God bless them, not the most agile systems, not the most customer-friendly pricing structures. And what's slowly but surely happening is that each componentry, from modeling and decisioning to AML, KYC, to at the bank, we're actually now working on building our very own core system. We're lucky to be financed to do that. Slowly getting replaced. And right now, the fragility of that, or the calcification of the systems, I think is what's slowing down a lot of those deployments the most.
Yeah, we did a really interesting custom integration with FIS, who is our processor of record for our card product, as you know, and had to integrate with their mainframe and worked with a COBOL programmer, assembly programmer on their side in Florida. And she's about to retire. I don't know what is going to happen to that company when she retires. She is amazing. And she told me, by the way, that she once tried C++, but it was too high level for her. So she prefers assembly. I don't know if that joke resonates with anyone here, but that's pretty intense. That's a hardcore programmer right there.
Well, Jake, speaking of which, I want to congratulate you on going an entire panel that neither of us said the words blockchain,
yes,
or Bitcoin about the whole time. I'm sure that hurts the valuation of the businesses, but actually I think is a lot of the reality of building real technology to create these products. So thank you for sharing that with us, and thank you for being such a great bank partner.
Absolutely, thank you.